Nash speaking a little earlier this morning. Now, you don't need to go far to hear now is a tough time to raise capital, especially for small to mid-cap companies. But there is good news. New listing rules at the ASX are making things a little easier. Companies that have a market cap of $300 million or less and are outside the S&P ASX 300 are now allowed to issue 10% more capital over a 12-month period. But there are a few conditions. To fill us in on the details, we're joined by Judith Fox, Director of Policy at Chartered Secretaries Australia. Judith, look, thanks very much for your time today. Look, how big a decision and occasion event is this allowing of I suppose new capital rules for some of those outside the S&P ASX 300?
Look, it's a very big thing for them, and it's fantastic because you've got around about 2,200 companies on the ASX list, and of those 1,600 are small to mid caps and meet the definition that you just set out before: 300 mil market cap or less than, and outside the S&P ASX 300. So that's a huge amount. It's a long tail on the ASX list that needs access to capital, and finally these rules will provide for that.
And I mean, just how hard, to set the scene for us, just how hard has it been to get capital for some of those smaller companies lately?
Yeah, well, those companies tend to be either start-up ventures with no track record of either revenue or dividends, or they might be more established companies with a bit of history that are looking for further opportunities for growth. But they often have a small shareholder base, so it's been very difficult for them to tap that existing shareholder base for further contributions of capital. And they have limited access to venture capital, limited access to debt funding. So they are in a position where they need to grow, and they're looking for more and greater expansion, and it's been traditionally quite difficult for them to access it.
I suppose it's one thing to relax the rules or to help promote the ability to raise capital. It's another thing to actually have investors decide that they want to invest. Now, we do know, of course, it's a tough market out there. I mean, how successful do you think these initiatives are going to be in actually seeing a build-up of capital for some of these companies?
I think they'll work, because let's go back to that point that I raised before, that at the moment they often have a very narrow shareholder base, so they can't really keep tapping them on the shoulder for further contributions of capital. And what these allow them to do is what's called a placement rather than a rights issue. And a placement is when an investment bank goes to its clients, and they're usually institutions, and it takes the risk of underwriting the offer, and there's a discount that's offered on the shares to those institutions, and the risk justifies the discount. So you're suddenly expanding the access of companies to a much greater range of potential shareholders than they previously had. So I think it really will make a difference. And there are substantial shareholder protections.
There has been some controversy. I mean, it sounds positive from the way you're describing it and all kind of smooth sailing, but it's been a little bit controversial, hasn't it?
It has, and I think partly there was some misunderstanding around what was being proposed. Partly I think ASX has actually tightened the shareholder protections in these final rules. They differ from the proposals. The big thing here is that you have to actually get a special resolution to get this across the line. Now, what that means is you've got to put this proposal before your shareholders. You have to get 75% or more of shareholders agreeing to this. That's a mandate. So there's no way that you can say that shareholders are being ridden roughshod over, or that they're somehow being shortchanged, when you've got your majority of shareholders saying, thank you, we can see why you're doing it. And the reason that shareholders will agree is because the board has to actually set out why they're doing it, what they want to use the money for, what the impact will be on existing shareholders, why they're doing a placements rather than, say, a rights issue or in addition to a rights issue, and also what the fees and costs are. So we're talking absolute transparency for the shareholders about what the impact is on them, and then you have to get that shareholder vote. So I think the ASX has really got it right in terms of making sure that shareholders have absolute knowledge of what the board decision making is, what its impact is going to be on them, and why it's going to be of benefit to the company as a whole.
Judith Fox, Chartered Secretaries Australia, thank you very much for coming on the show today.
Pleasure, thanks.